Okay, hello everyone. Welcome to the Pro Trade Room Plus and the FOMC Minutes. My name is Lee Goldstein, the Trading Director for 10-Minute Trades. Please remember, I am not a financial advisor. All the trades discussed are for educational purposes. Okay, turns out that that was one of the worst bond auctions since 2020. And it caused the price to go down on many different instruments. As you notice, the ES went down as well. YM, gold had a downward move also. So, it's just like, think about it. It's like any news report that we trade. What we want is for the result to be a surprise, right? What's better than a cruddy result, worse than expected, better than expected? That's what gives us the best tradable kind of moves. So more often than not, look, it's not always 100% that that's what works, but more often than not, when you get a result in the news that's unexpected, for a breakout in particular, then we get the kind of move that we want to see. With a trap trade, and the reason I'm discussing this is because the setup we have for FOMC minutes is a trap trade, and there's a very big elephant in the room. And I'll explain what that is today. First off, know a little history about the FOMC minutes setup. This is a setup that about 6 months ago, we were going to completely walk away from it because it's inconsistent. And all these years, it's not like the bond reports where, they worked and then they just haven't been working that great. And you're waiting for them to get consistent again. The FOMC has never had a consistent setup. And my boss said, look, I'm going to end the, oh, shoot. I completely forgot that we're streaming. Hold on. Bear with me, folks. I think I didn't send the email. Oops. Hold on, everyone. This is not the way I like to do things. Give me 1 minute. It won't take long. But if I did not send the email, there's no point in streaming it. That's the sad reality. All right. Let me just restart the screen, everybody. I think I have a little bit too much going on these days. All right, welcome everyone to the FOMC Minutes. My name is Lee Goldstein, the Trading Director at 10-Minute Trades. Please remember, all the trades we discuss are for educational purposes. I'm not a financial advisor. It is possible to lose money trading futures. Okay. Chantal, you got the stream going okay? You good? Okay, and thanks for the reminder. All right. So thank you everyone who's not watching us on YouTube because I goofed. So I do apologize for not sending that email. My mistake. Um, the elephant in the room. FOMC minutes. The report has a history of not having a reliable, steady setup. So look, there's many reports where the setup changes, right? The setup changes. You might have a bond setup for a year. You might have a gold setup for the next year. And that happens a lot. There's a lot of reports. Look at the CPI reports, look at the PPI, look at those big volatile reports. They get different setups over time. Sometimes they have a range trade, sometimes they don't. Earnings also can sometimes fall into that category. But the FOMC minutes, unfortunately, it's never in its history had a very reliable setup, and it sometimes moves, and it sometimes doesn't. But it's the funny thing about it. It's the kind of report that I love to trade because it has that opportunity to have a crazy move that can give you a good profit. But unfortunately, it's sad to say, but FOMC minutes just doesn't really fit the bill. So I'll show you what happened last session. I say session because it's not quite monthly. There's 8 reports a year. And then they skip a session. So it's like instead of 12 meeting minutes, there's 8. I mean, that's how many statements there are here, obviously. The minutes are the report based around the statement. But it can still be volatile because the statement can have some updated information in it. So this is what happened last session. It was January. It was a great trap trade. It was perfect. It was perfect. Now, what's interesting, let me just look at that one more time. It's different than my testing. It's definitely different than my testing. So I want to look at something real quick. Ah, okay. It was smaller tiers. Okay. Definitely quite a bit smaller than what we're thinking today. That's why I couldn't figure out why it did what it did. But it was a beautiful trap trade. This is what you want to see from a trap trade. You want to see a pop and a drop, or a drop and a pop. I mean, that's what you want to see. And you want it to be fast and big, but not so big that it goes through your stop. Okay? Not that complicated. So in this case, we get a push down. It fills both tiers. Okay? And it has a phenomenal reversal. Absolutely phenomenal. Okay? So the issue is this. And also the NQ had a whipsaw. You don't want to be trading. I don't think you want to be trading the NQ on a breakout because it would have been tricky, right? Because you had some significant whipping that week. Now, look, it was a slow enough whip that you might have gotten a profit last time, even on the NQ as a breakout. So it's kind of interesting. It wasn't such a fast whip that it would have killed your breakout. So sometimes you can get a trap that works as a breakout and a trap. It is possible. The issue is look at the DMM and the testing. That's the thing. That's what we're dealing with. That's the issue. You know, what do we always say? You want to trade the reports that give you the opportunity for profit, right? Trade the reports that give you the opportunity for profit. And basically, there's no trades taking place on the trap. There's no trades taking place. Now, the reason that last one is not on the DMM is because if you look at the date, it was January 3rd. January 3rd is an official day off from news trading. That whole week, my boss traditionally does not trade, and he does not generate DMMs. He takes that week off for the holidays. But over the years, I've discovered that you can still get some pretty good moves on events, whether it's holiday trading or not. So we had a trade room for the FOMC minutes, and it was the best move of the year. Of the year. Okay. All the other trades, almost all of them, and according to my testing, they didn't fill. November didn't fill. October, pretty small profit. August, no fill. July, no fill. May, no fill. April, no fill. So basically, you've got an event that doesn't have a setup that's really working. So here's the elephant in the room today. So look, so I think to myself, just to give you an idea of the kind of thinking that I would do after all the years that I've spent trading events, making good decisions, making dumb decisions, just going through all this experience with all of you. And so here's what goes through my mind. Okay, we've got an event that has 6 of the past events, only one of them even had a fill, and it was not overly impressive. Let's look at October. Okay, so let's put some graphics onto the trade. Let's look at October. Here was the October setup as a trap up. Let me get the correct setup. So I got to get my testing, because we've been trying the NQ forever and ever as a breakout on FOMC minutes, and it's just mediocre at best. Occasionally it works. A lot of times it doesn't. It just hasn't been good enough. Okay, here's October, which on the DMM as a trap trade had a 18 tick burst. So 18 ticks, not exactly a very big burst. I do want to thank the folks that are watching us on YouTube. Thank you. Hit that like button, folks. Hit that like button because you all love us so much. And we'll keep streaming. So we get our 1 tier fill, okay, in October. And it doesn't make its mind up to reverse yet. Now it looks like it's actually starting to reverse. Wow. So I bring the stop to safety, and it backs up on me. All right. So I kept the strategy going to see if I left the stop further away, would we had a much bigger profit possibility, right? So you're looking here, and it did go down, I would say, at least 3 more points. So, $150 or so available for profit on that October trade, okay? So, out of all the events that we're dealing with for the last 7 months, and it's really going back to April, it's a little more than 7 months again because they don't do it every month, not monthly. We're going to include January because we had a trade room. So what goes through my mind is, all right, so look, we've got an event that it doesn't fill. So what's the worst that could happen? You put the trade on, and if it doesn't fill after about a minute, you cancel your trade. So normally I would jump on this, and I would jump right into trading it and say, oh, this is awesome. I want to trade it. It's worth the risk. It usually doesn't fill, but there's a big elephant in the room. And we started seeing this elephant shake its trunk about 2 weeks ago with CPI. CPI was a big miss in the news and a gigantic burst that exploded through our trap and ruined it. And it was a breakout, not a trap. Okay. That's the elephant in the room. The elephant in the room is that everything has changed. Even though we've done 6 or 7 months or longer of testing, we're not in the same boat. We're in a different boat right now. The boat changed with that CPI report. The boat's taking on water right now, and the boat's looking like the Fed doesn't know what they're doing, or has completely screwed up. Gee, what a surprise. The Fed, my Lord, uh, they were too late to cut. Now they're, are they, I mean, to raise, and now they're, it's the media's fault for talking about cutting. They shouldn't have been talking about cutting anyway. But do you understand what I'm saying? We're in a different boat because inflation may not quite be under control in the way that everybody wants. So yeah, we could put that trap on, but I don't know that we can trust our cancels, because I think the elephant in the room is the comments. In the comments, exactly what Lewis is saying. The Fed's also talking today before the minutes. If you would look at your calendars, you'll see that the Fed is talking. The elephant in the room makes the trap much more risky because there's a possibility the market's not going to like what the Fed says. So I was seriously, first of all, NVIDIA was the trade I was interested in trading today. That's the trade I'm interested in because I love those earnings trades. But I had interest in the Fed minutes until the CPI report. Once the CPI report came out and we started seeing how the market's responding to inflation reports, it definitely makes me realize the risk has gone up stratospherically on this report. That's the honest truth. The risk is up big time. And it's because of what they may say in the statement. It's possible that the Fed, but look at what Bowman just said. The time for lower rates is certainly not now. If they say that in the minutes, the market's not going to like that. That's one Fed guy making a comment. That's not in the minutes. It's not in stone. If it's in the minutes, the market's not going to like it, and you might not get a move up and down. You might get a directional move in one direction. So in my opinion, there's higher risk today, much higher, because of all of the elements I just spelled out to everybody. So I'm not going to trade it. I was thinking about trading it, but I think if it was working, if it was a report that was working, but look at the report to begin with. Would you trade it anyway? I was only going to trade it because it fits that. Maybe there's a possibility you could get a good move on it because it's that type of a report kind of thing, but it's not a report that fits any kind of, well, we should trade this report because of the way it's been behaving. It would just be me trading something because there's a possibility it could do something. That's not the greatest reason to trade a report unless there's a real good possibility it could do it. And I think because of what's happened with the Fed, that the possibility got lessened that it's going to be a normal behavior on the report. So I'm not trading it for that reason. I think there's extra risk. And, just thinking about my feelings about the bond report this morning, not this morning, this afternoon, I wouldn't be surprised if I'm completely wrong because, I told you the bonds were going to have the best move they've ever had because I didn't want to trade it because the performance was so mediocre. So certainly you could see the same thing happen. I think that this report can be analyzed reasonably intelligently. And I think my analysis is reasonably intelligent today. Here's how I would trade it if I was going to take the risk. And it's about a $400 worth of risk with a 20 stop on the ES. It's not minimal risk. Now, you could always say, hey, let me see what's going to happen. Let me trade it with the MES. Certainly, you can do that. Reduce your risk, okay? Way reduce your risk. So let's see what takes place here. So the way that I was going to trade it, the way that Chantal and I tested it, a tiny little bit of a difference from the DMM. Tiers of 20 and 30. Tiers of 20 and 30 is what our testing said was good. So that's what I'm going to put in. Position 1 is a 1. Position 2 is a 1. Tier 1 is a 20. Tier 2 is a 30. The time of the event is 1400 hours, right? It's a 2 o'clock event. So you all use 1400 hours with a 5-second prep also, that's fine. And let me just set my setup here properly. Tiers of 20 and 30, stop is 20. And then your time is 1400 hours, 2 p.m. Eastern time. 2 p.m. Eastern time. Don't forget, if you're not in the US, use your local time. Top of the hour coming up local time would be the correct time. It would not be 2 p.m., right? If you're in another country, unless your time is exactly the same as ours. Okay, so that's what I'm watching. There's always the possibility that you could get other instruments moving on this event. The NQ is a good instrument to trade on this event. It tends to move. Gold has not been all that impressive on FOMC minutes, and neither has bonds been all that volatile on the FOMC minutes, which always surprised me. But the NQ 0324 is the current contract. You can use the reversal continuation setup if you want to on an NQ or an MNQ after the news trade. Now, I would say that a report like this, FOMC minutes, is extreme high risk, in my opinion, to try and trade the news itself outside of a setup, if you follow me. In other words, as a discretionary trader, it's definitely risky and not simple to trade this type of an event because they're constantly coming out with different comments every couple of seconds almost. And it can really make for unusual movement in the market. So if you're not an experienced trader, you just want to be aware of that, okay? So we have a setup, reversal or continuation. And normally when I do it and show it, I just trade one position, and I would use like a 30 tick target, even 40. There could be volatility on this today, and you have to use at least, I would say, a 30 tick stop. So all you need, remember, for a reversal continuation trade is a position. We have one, a target. We have a 40 tick target and a stop. Okay. And then turn off your account warnings enabled and label your trade so that you know that's not the trap trade. If you're also testing the trap trade, label it REV, whatever you want to label it. That's up to you. When you enable that reversal setup, you get your buttons, instant long, instant short, so you don't enter the trade unless you decide to go in. okay, with a button. Let's check our time sync. Make sure the computer's in sync. And then we will be back at 4 p.m. for NVIDIA earnings and as an afterthought, the API report. The API report has sort of become an afterthought these days, hasn't it? It's not been doing all that great. Every now and then it has a range trade that works. The after the news has been challenging for a month or so. We're going to go to time is, check our sync. We're in sync. So we're ready. Okay. How do you know that Bowman might be speaking? You got to look at a variety of different calendars. You should look at investing.com. Okay. Go to news, hover at news and click economic calendar. Click. If you don't click anything, it'll show you today. All right. And you could see this morning, Bostic was speaking this morning, and, you know, different people in Canada was speaking. Bowman was scheduled to speak at 1 p.m. So you can look at Forex Factory also. Usually they often have the people that are speaking. Investing.com. Get into the habit of looking at a variety of different calendars. Financial Juice, Investing.com, Forex Factory. If you're going to trade news events, you know, no, there's a lot more calendars. Oh, Econoday, FX Street, right? There's a lot of calendars. The more digging you do, the safer you can keep yourself by being aware of, you know, what might be going on in a market that you didn't realize. So it's important. It's really important to be aware of what's going on in the market when you're trading events. So let's see if my analysis is correct here. So what I'm thinking is that we're going to get more of a move in one direction rather than a trap today. That's what I'm thinking. The trap, you can see, it hasn't really been a setup barely worth trading. It's only had two viable events since April in 7 FOMC minutes. We've been trying NQ breakouts a lot. Let me show you. And I kind of threw my hands up on NQ breakouts. This was November. I just want to see what I'm looking at. Okay, so November, we were looking at the NQ. And this video seems to be frozen. So, okay, unfortunately, that video is not working. So let's see what happened in February. In February, we had an NQ breakout. It's already after 2, and it was not that responsive yet, okay? A little bit of chop. You could see the ES. We know the ES hasn't been moving on this report. And then the NQ goes and fills, and actually looks like it hits target 1. And one of the reasons we look for a different setup on the NQ, inconsistency, right? When we have a setup that doesn't return profits regularly, that's inconsistency. So you look for a different setup. We try to find the most consistent setups. Sometimes it's a challenge. So let's see what happens here. So we've got 1 minute. I would give the ES about a minute to fill the trap. That's what I've been doing in most of the testing. So we'll see if we get the kind of activity price-wise that I was thinking. You've got some interesting levels. You've got the low and the high and the PP above, right? You've got levels that can certainly be tested after this news, depending on what happens. You've got the NQ low. Now, okay, here's our trap. So let's watch the news. The report's now out, and you had an NQ that looked like maybe a breakout. Well, that's a little tricky there. Maybe an NQ breakout might have hit your first target there. The ES, I said I'd give it about a minute. I'd kind of be surprised if it didn't fill, but maybe that's ultimately what it's looking like it's going to do. So just watching, not a very big move on the ES. So if I was now, the NQ looks like it wants to go test the low. But remember what I said, the market's going to respond to the news. And the news is like being fed nonstop from the report, which makes it very tricky. So you've got more than a minute. I would have probably let that fill. Okay. I would have let that fill if I were trading this on the ES. We've got one tier that filled. Okay. It's kind of reversing. It looks like it's reversing. I would cancel the outer tier. It's right on the border. You can prevent a loss no matter what by getting your price above the entry. Your price is above the entry. I would not trail at all. You got a lot of chop going on there. You're above entry. No matter what, you're not going to lose money on that ES trap trade, but you wouldn't have made more than $25. $25. Nothing. Nothing. Hold on, folks. 1 second. Hang on. Oh, you're good. Okay. Thank you. All right. So on the ES, keeping in mind where you would have gotten filled, we wanted a move to the upside. Okay. We wanted a move to the upside, and that's not what we got right now. I think it's going to also test the low, but you had an opportunity to get out of the trap without a loss. But it certainly, if you waited more than a minute, it would not have been a big winner. The NQ, we'll look at the video. It looked to me like it would have filled as a breakout to the short side. Okay, to the short side. Now the ES, it's trying to change direction. Okay. So there was some opportunity, it looks like, depending what you did with your stop. And then the NQ completely changing direction now. Okay. So the ES trap, if you left your stop alone, then it could have been a much better trade. And I'll show you what I'm talking about. The NQ was definitely a short, and we'll take a look at the video to see if our old setup, the breakout, might have made more sense. Now, I wasn't even thinking reversal, folks. You should have taken a reversal trade off the low. I wasn't even thinking. I was just watching. So my apologies. There was obviously a tremendous opportunity for that reversal off of the low if you wanted to take it, just based on it was pretty low risk too. I don't think I would jump in here, right? Unless you like chasing. Um, but it looks like the market likes what the minutes are saying for whatever. All right, let's look at the video. Right to the PP. VWAP, sorry, VWAP. Interesting though, what a complete change in direction. And I'm sorry, I was analyzing what the price action, wasn't even thinking about that second trade. Let's look at the video. Give me 1 second here. So see what happens though when you try to overthink things. I think maybe I'm going to do a little bit less thinking and just we have a strategy, just trade the darn strategy. Too much thinking, and look, it's an opportunity missed. Too much thinking. Too much thinking. All right, let's look at the video. As long as you're willing and accepting of the risk, then you don't even have to think. Just take the trade. We test it, right? Too much thinking. All right, let me show you what I mean about the trade management on this trap trade. Okay, here's the fill. All right, it fills the one tier. It took 40 seconds. It took the 40 seconds. It goes down. It's going to fill that first tier, and then it changes direction. So the original stop, I mean, it's far, far away. It's far away. Okay. So let's say, you just bring it closer to safety. Just think of not moving it. It's at 64.50. It's at 64.50. It never comes anywhere close to your stop. So you would have had all of this moving up would have been profit. Okay. So that's how you can understand if you're willing to take the risk. Once you get filled, you don't have to move your stop to safety. You can leave everything in place and let the trade play out. There's no law that says you have to protect profit. You don't. That's a personal choice in how you manage an event. All right. And let's just look at the NQ because our previous setup was a breakout. So at the exact moment of the news, you'd have at least a 20 tick bracket on this report. The price was around 52.25, okay? 52.25. And it has a pretty fast drop. The real question is, where would you have gotten filled? Because it does have a pretty significant pullback also. So it really depends on where you would have gotten filled. That would have determined. I would have had at least a 35 tick stop. And that's 20. I think you would have survived with no problem. I think it would have been fine. The NQ, you'd have a good, look at that wick that went up. You never know if that would have stopped you out, right? If you follow me. So I'd have to really do a little more looking into what would have happened on the NQ and the setup, but suffice it to say, I just need to look at it a little bit further. But here's where I wasn't thinking about that extra opportunity of the change in direction. The ES candle turned green. The NQ got green. Certainly potential if you like risk. Okay. All right. So interesting. Definitely interesting. Um, the trap would have worked. Would I have protected my profit? Probably. So, I mean, being honest, I probably only would have made about $25 on the trade, just based on the way I've been trading most trap trades lately. I don't want to be a make believe hero and lie and say I wouldn't have moved my stop. I probably would have. So I just want to be truthful. But it's important to understand that there is more opportunities, way more sometimes than we trade. So keep that in mind. Yeah, the trap was perfect. Ask a question for NVIDIA. Yeah, Bruce, sure. Shoot. What do you want to know? We'll be back at 4 o'clock, folks, for NVIDIA. 4 o'clock. Do you mean automatically? You mean automatically? How to move the stop? Oh, it's real easy. Couple of ways. So Bruce is asking, how do you move a stop to break even? Automatically using the software. First things first, if you have any trade activated, enabled, I'll enable the reversal because that won't trigger. Notice that you have up top on the top of your chart a break even button, BE. So Bruce, you have a manual way just to click the BE button on all trade charts that have enabled trades. We have a break even button. So that's one way. All right. In the software, depending on the setup, but on NVIDIA, we'll be trading a breakout. So on a breakout setup, to move the stop to break even automatically, after it hits the first target one stop move, moves the stop to break even if you type BE into the target one stop move input. Okay. And you can type BE plus 10, BE minus 10. So you have the break even button, which is manual. The target one stop move moves the stop to break even automatically once the first target is hit. Target two stop move does it after target two gets hit. So that's how you do it. Okay. Yes. Thank you very much on YouTube, everybody. Appreciate you all watching. Hope you all learned something from our stream. And we will see you the next time, next week, when we stream again for free. So take care, everybody.